Hall Street Limited, company and business taxes. Key changes for companies and businesses were as follows. Reduction in the rate of corporation tax. We had some improvements to capital allowances. We had some improvements to research and development tax credits and a new tax relief for disincorporation. So let's have a look at each of those in a little bit more detail. The headline rate was that from the 1st of April 2015, the rate of corporation tax for all companies in the UK will be 20%. That's a reduction of 3% from the rate in effect from the 1st of April 2013, which is 23%. That gives us one of the lowest rates of corporation tax and is aimed at making us a more attractive place for business. We also had a raft of changes around capital allowances. Now these were pre-announced and so for many people are not news. We have an increase in the annual investment allowance from the 1st of January 2013. We can now claim 100% tax relief for capital expenditure on plant and machinery, excluding cars, of up to £250,000 per year. We have had so many changes up and down in the rate of annual investment allowance that the rules are very complex. The following slide shows a summary table which gives you an idea of the maximum entitlement that you can claim depending on your accounting year end. By working with that table and carefully planning your capital expenditure, you should be able to get a considerable benefit and a considerable reduction in your corporation tax. We also have a range of other capital allowances available. The standard rate of capital allowances is 18%, but we also have 100% relief for various energy-saving items of plant and machinery, and also for various conversions and business premise renovations. They are all summarised on the slide. Research and development tax relief is a very valuable relief that we have available to us as UK corporates. The changes made in the Budget 2013 affect mainly larger companies, and so I'm not going to focus on them in this seminar. What I am going to talk about is the relief available for small and medium-sized companies. There has been no change to this relief. You are able to claim 225% tax relief on expenditure incurred from the 1st of April 2012. And that is on work carried out to resolve a scientific or technical uncertainty aimed at achieving an advance in science or technology. Quite a mouthful. But if you work with the rules, you would be surprised at the availability of claims. HMRC consider that this relief is massively underclaimed, and they are aiming to encourage you to claim wherever possible. Research and development does not need to be purely blue sky thinking. It can be part of a larger project, it can be work that you're doing to resolve uncertainty for your customers, and it can also be work that you're doing on existing products. Just to give an example, our client Mr. Hall makes CCTV cameras. CCTV cameras are, as we know, used regularly in lots of different places. Mr. Hall's client asked him if he could develop a CCTV camera which could be installed in tanks. The work that he had to do on his cameras to enable them to be installed and working in a tank did qualify for R&D because he was changing sufficiently, modifying an existing product and overcoming technological uncertainties to enable that product to work in that environment. So if you are thinking, have I got any research and development work? Well then these are the key questions to ask. Are you undertaking the development of new products or processes? Are you duplicating existing products or processes in a new or appreciably improved way? Does your company make advancements in its field of work? Do you employ any technical staff or scientists or similar? Do you consider your business to be technically innovative? All of the above questions indicate R&D activity and suggest to us that a claim may be possible. Overall, with R&D tax relief, the thing to remember is nothing ventured, nothing gained. HMRC are actively promoting this relief, and now is a good time to consider whether it applies to you and your business. Patent Box is a 10% rate of corporation tax which will apply from the 1st of April 2013. Generally, people think that this relief will apply only to larger companies, but that is not the case. It's open to all companies. The 10% rate of corporation tax applies to income arising from patents or exclusive licences. It will be gradually phased in from the 1st of April 2013. The 10% rate will actually only be applicable from the 1st of April 2017. This isn't a subjective relief. If you have a patent, you can make a claim. Because the relief is being phased in, it's a perfect opportunity to explore the possibility of obtaining patents for any of your existing products, and grants are available to assist with that process. The final change that I mentioned was a disincorporation relief. Currently, if you want to cease your operation as a limited company, there is no relief to enable you to do so in a tax-efficient way. From the 1st of April 2013, we have a new disincorporation relief. Now, this relief will only apply for a period of 5 years. We are not sure why that is the case, and it may subsequently be extended. The relief will enable you to transfer any taxable assets, so land and buildings and goodwill, from the limited company into a sole trade business or a partnership free from tax. But there is a limit on that of a maximum value of £100,000. The relief will not be automatic, and it will require an election to be made by the company and its shareholders. So what are our tax-saving tips for Hall Street Limited? Well, we've got a reducing rate of corporation tax over the next couple of years. So we need to carefully look at deferring income or accelerating expenditure to optimise the use of reducing rates of corporation tax. We need to plan capital expenditure carefully to make sure we make optimal use of capital allowances, and in particular the £250,000 annual investment allowance. Consider the possibility of making a claim for research and development tax credits. As I said previously, nothing ventured, nothing gained. And identify any patents or products that could be patented, and explore the possibility of claiming the 10% rate of corporation tax.